Thank you for joining us. My name is Christy Jones, and I'm with Kerber, Eck, and Breckel in Springfield. I'm joined by Bethany Yeager from Kerber, Eck, and Breckel, and Mike Baker from the Department of Commerce. So today we're just going to give an overview of the Workforce Innovation and Opportunity Act. I realize that some of this information is very detailed. We are going to take breaks at the end of every section to answer questions. You can also type into the chat pod at any time to raise a question, and we will answer it at the break. Your phone line will be muted, but when we have a Q&A section, Chelsea will go ahead and unmute the phone lines. So part one, we're just going to give a summary of federal legislation and the highlights from WIOA final rules. Part two, we're going to go over the governor's guidelines and the MOU template, the general requirements of the MOU, and infrastructure and shared costs. Part three, we're going to give a quick introduction to Comprehensive One-Step Center certification. And then I want to leave you with several web links so you can have WIOA resources at your fingertips. So federal legislation and final rules. WIOA was signed into law in 2014, and many of you worked with WIA. As you know, WIOA amends and replaces WIA. It leaves in place many of the basics, but where a lot of the learning curve comes in is that it includes significant new requirements. We have two slides with all the goals of WIOA, and I'm not going to go into detail on those, but I do want to point out that WIOA is all about integration and collaboration, and it's much less of a siloed approach in comparison to WIA. The map shows that Illinois consists of 10 EDRs and 22 local workforce innovation areas, or LWIAs. And one thing that is a little bit confusing, and some of you are aware of this, the LWIAs exceed the number 22, but that's because there's been mergers over the years. So under WIOA, there's 16 required program partners, and 4 are core program partners, and they have additional obligations. It's important to note that the services of all partners provided through one-step delivery systems and comprehensive one-step centers. So the basic structure under WIOA is that all required program partners are required to use funds to maintain the one-step delivery system, and this is why local areas actually have MOU negotiations. And then as we just wrapped up negotiations, it's important to have timely negotiation of local MOUs. And the report of outcomes, as you know, were due on April 15th. So the 4 core partners, there are 4 titles in WIOA in the statute that form the foundation of the workforce system. Title I is administered by Commerce as the primary source of federal workforce development funding to provide career, training, and employment services to adults, dislocated workers, and youth. There's also Title II, which is Adult Education and Family Literacy, and that's managed by the Illinois Community College Board. Title III is Wagner-Pizer Employment Services in Illinois. That's administered by the Illinois Department of Employment Security. And then there's Title IV, Vocational Rehabilitation Services in Illinois. That's administered by the Illinois Department of Human Services, Division of Rehab Services. One thing I want to point out that can be confusing is DHS is a core partner, and then DHS TANF is also a required partner, so they technically have 2 programs.
Christy, let me jump in real quickly.
Sure.
We were keeping up with the slides, and I want to make sure the CSBG providers see this part. Their role in the whole mix is they are one of the 16 required program partners under the WIOA Act. So that's why their participation today and in the overall structure is important. So there are 16 required partners, the 4 core partners you were going over just now, and then the services of all those partners have to be provided at the one-stop.
Yeah, and in a couple of slides, I'll show all of the required partners. But first I wanted to point out that core partners have additional obligations under WIOA. One of the items that they are responsible for is the Unified State Plan, and that was actually submitted earlier this year, and you can read that on the WIOA implementation portal. They also are collectively held accountable for 6 primary indicators of performance, and under WIOA, if one fails, they all fail. So this is what Mike was alluding to. Why is CSBG required to participate? Well, CSBG is on this list as a required partner under WIOA. So in the federal statute, CSBG is named. All of the core partners and these required partners must provide access to their programs in every comprehensive one-step center throughout the state. It's important to note that local workforce development boards can also include additional partners in one-step centers. The responsibility of WIOA required partners is to provide access to program services through local one-step delivery systems and comprehensive one-step centers, make career services available by each program and accessible to adults and dislocated workers at comprehensive one-step centers, and we'll talk about career services in more detail later, use a portion of program funds to maintain the one-step delivery system, and contribute a defined share of infrastructure costs of one-step center. The obligations of all WIOA partners, so this is where CSBG comes in, negotiate a memorandum of understanding or an MOU in each local area, use a portion of program funds to maintain the one-step delivery system, and contribute a defined share of infrastructure costs to operate the comprehensive one-step center. We'll talk about these in greater detail in the next section because I want to make sure you have a clear definition between delivery system costs and infrastructure costs. Okay, so WIOA final rules. What changed about infrastructure costs, and those are the non-personnel brick and mortar costs, in the final rule is what happens when local partners cannot agree on how to share costs. Core and required partners in every local area have to negotiate MOUs, and that includes how they share costs. They have to negotiate an annual budget for how they will share costs, so that's an annual event that has to occur. The expectation is that partners will reach agreement on how to share those costs. If they fail to agree, then there's a mechanism where the state dictates what each required partner pays. The final rules actually invoke the governor in these decisions, so the state funding mechanism is only used as a last resort, and we hope to never use this. We'll describe more about infrastructure funding when we walk you through the governor's guidelines in the next section. Another thing I wanted to note on this slide is that final rules clarify what types of funds core and required partners can use when they are paying their share of service delivery and system costs. We'll talk about what each of these means when we talk about the governor's guidelines, but it's good for you to know that the final rules are specific about how each partner can meet its financial obligations in each area. And suffice it to say here that you have a lot more flexibility when local partners come to an agreement on how to share costs. I'm going to read that one more time. You have a lot more flexibility when local partners come to an agreement on how to share costs. There's virtually no flexibility if you come to an impasse and you have to rely on the state funding mechanism. Under final rules, the way local areas allocate infrastructure costs operating the comprehensive one-step center is called the Allocation Methodology. And the governor's guidelines say the preferred method is based on FTEs. And I know there have been some FTE questions, so I just wanted to break that down a little bit. An FTE is a full-time equivalent, or the number of staff the required partner is committing to provide services under WIOA in the comprehensive one-step center. So this is not the same as the number of people or head count. There's a difference between people, head count, and FTE. If a local area is using FTEs as the cost allocation methodology, each required partner must determine how many full-time equivalents it takes to deliver their services in the respective comprehensive one-step center. So as an example, a required partner with 20 FTEs working in the OneStep Center will pay a certain portion, and a required partner with 1 FTE will pay a lesser portion. One other nuance is when partners are counting their FTEs who provide services under WIOA, they count the FTEs who physically work in the Comprehensive OneStep Center and the FTEs who provide services in the center via direct linkage technology. So if we use rehab services as an example, and they have a central staff member in Chicago answering Skype calls in Marion, Illinois, the Title IV partner in Marion would still count that Chicago-based services as providing services in the Marion Comprehensive OneStep Center. And that affects the amount of costs allocated to the Title IV partner's share in the MOU. So I know there's a lot of technical items in there, but that's an explanation of FTEs. And then in terms of direct linkage, we'll talk about that later on in the presentation. So career services under final rules, there's 23 career services that must be made available in every Comprehensive OneStep Center in Illinois. There's 11 basic career services. There's 11 individualized career services, and there's 1 follow-up service. And whenever I think of career services, I always go directly to the local service matrix for the Comprehensive OneStep Center. That's actually included as a component of the MOU template. So you can go and look at all of those there. Some examples, so for basic career services, there's eligibility determination, outreach, intake. For examples of individualized career services, there's specialized assessments, individual employment plans, and group counseling. Career services must be made available in every Comprehensive OneStep Center. But core and required partners can provide career services in 3 different methods. So you can do it in person, through cross-trained staff, or via direct linkage technology. Okay, I know that was quite a bit of information as an introduction. We can go ahead and unmute the phone lines if there's any questions. Okay, I don't see any questions in the chat pod. If there's no questions, we will move on to the Governor's Guidelines, MOUs, and infrastructure costs, and then we'll take a break at the end of this section for additional questions. Is there a question on the line?
So Stephanie, you're asking if the PowerPoint can be emailed. If you go to the pod, I believe it's in the lower left-hand side of the screen, you can download the slides right now. And Leslie says she can send out the files afterwards to anybody who missed it.
Okay, so July 1st is an important date in WIOA implementation because these 3 things take effect. So the OneStep operators must be selected in operating the Comprehensive OneStep Center, and we'll talk about operators later in the presentation. Certification of Comprehensive OneStep Centers takes effect, and then regional and local plan modifications and MOUs take effect. Governor's Guidelines. I hope everyone has had a chance to review the guidelines, and I will make sure at the end of the presentation that you know how to access them via the WIOA implementation portal. But the guidelines are a really big deal in Illinois because they are required by WIOA, and they provide guidance to local partners about how to negotiate MOUs and how to negotiate cost sharing to operate the Comprehensive OneStep Center and ensure delivery of services throughout the local area. There's 3 main purposes to the Governor's Guidelines. As I said, it fulfills a WIOA requirement for the Governor to issue guidelines for negotiating cost sharing and service delivery, optimize service quality and value for customers and core partner return on investment, and establish ground rules for MOU negotiations and cost sharing. This next slide just lists all the areas of the Governor's Guidelines. I did want to point out there's some sections of the Governor's Guidelines that I don't think people always think to go to the governor's guidelines to look for. For example, there's a timeline, there's a glossary of terms, and then the MOU template is actually a part of the governor's guidelines. So a quick history lesson on the governor's guidelines. They were first issued in December of 2015, but they were issued under WIOA draft rules. So some things were done without the benefit of having final regulations and guidance. The guidelines had to be revised because the federal agencies delayed the effective date of infrastructure funding, so we had to adjust all the timelines and make quite a few changes at that point. Next, we issued Governor's Guidelines Revision 2 because the final rules were issued June 30th, 2016. So we had to revise the Governor's Guidelines. So that's why you'll still see Governor's Guidelines and then Governor's Guidelines Revision 2. Always go at this time to Governor's Guidelines Revision 2 because that's what the state is currently operating under. This revision got more specific about how partners could meet their financial obligations if they agreed or if they failed to agree on sharing of infrastructure costs. Changed the language about ways partners can provide career services. So the final rules did, so we had to adjust the guidance in the governor's guidelines. We also revised timelines specific to what we hope is more than 1 year, so we hope that this version can stay in place. And we revised the MOU template and budget spreadsheets to reflect all the new requirements. So that's the actual MOU template that you were working with the past 105 days. To make things a little bit more confusing, if that's possible, in January of 2017, 3 TEGLs were issued, and TEGLs are training and employment guidance letters. And so we came out with Governor's Guidelines Supplemental Guidance for PY 2017 only. But I do want to clarify that Governor's Guidelines Revision 2 is still in effect. The supplemental just works alongside Revision 2. I'll quickly go over what's in the supplemental guidance for PY 2017 only. One of the reasons I wanted to point this out to you is if you are on phone calls with CSBG providers in other states, they may be working under the federal statute, but their policies may be a little different. So this is what we're doing in Illinois, and you can always go back to that by looking at the supplemental guidance for PY 17. The effective date for implementation for all infrastructure funding requirements in Illinois remains July 1st, 2017. Infrastructure funding requirements apply only to comprehensive one-step centers in each local area for PY 17. They do not apply to affiliate or satellite sites. As I mentioned earlier, the preferred cost allocation methodology in Illinois for each required partner's share of infrastructure costs and local service delivery system costs remains FTEs. Required partners must contribute to define applicable career services and commit to pay the cost of providing those services in the Comprehensive One-Step Center. So again, going back to the matrix. Cost-sharing obligations of multiple adult ed providers and CTE colleges in a single LWIA. I did want to read some language per TEGL 17-16. When 2 or more grant recipients or contractors of a required partner program are carrying out the program in a local area, both of these entities must contribute to infrastructure costs. And then the signature of required partners on the MOU is sufficient to indicate their agreement with the budget and cost to be shared. If you're talking to other states, they may not be using the term budget. They may now be using the term infrastructure funding agreement, but in Illinois we'll continue to use the term budget, and they're interchangeable. So now you know that the governor's guidelines are your authoritative source on how local areas should negotiate their MOUs. So let's talk a little bit about what is actually required in MOUs. They serve as a tool to achieve integration. They reflect a shared vision and commitment of local workforce innovation boards. They document each required partner's commitment to service delivery. and demonstrate that negotiations were in good faith by individuals with authority to commit financial and programmatic resources. MOUs have to be negotiated at least every 3 years per the law. But partners have to negotiate the MOU budgets every year per the law. So local areas essentially have to append to their MOUs every year the updated budgets for how the partners are going to share in the cost. This slide talks about the general requirements for MOUs and decisions reflected in the MOU. There are a lot of commitments that must be made when you're negotiating your MOU. And as you are aware, if you were at the table for local negotiations, there's a lot of areas where a disagreement could potentially occur. How is each partner going to provide its services in the local area? At what specific locations will those services be available? What methods, is it in person, via technology? Just a lot of questions that need to be ironed out and negotiated at the local level. When we're talking about how each partner will make its services available in the local area, the definition of access in the law is very important. And as I said earlier, there's 3 ways that this can be done: having staff physically present, cross-training another partner's staff, or provide services through direct linkage technology. Direct linkage technology has very specific requirements in the law, and in Illinois we even have more stringent requirements, and those are in the Governor's Guidelines Revision 2. This slide has the direct linkage technology requirements in the final rules. So direct linkage through program staff or technology must be made available if needed and demanded by the customer. So if a customer comes in, you must be able to provide that service. Program staff can arrange to meet with a customer at a later date and time. Providing a phone number, website, or pamphlet is okay as long as it's not the only information offered to a customer. Direct linkage via technology to a program staff member must remain available to the customer at all times. This next slide is Appendix 4 in the Governor's Guidelines. So these are the additional direct linkage requirements in Illinois. Direct connection at the OneStep Center via phone or web-based communication can be available. And if you look at the slide, it goes into greater detail. So you must have high-speed internet capability for video, or you must have a voicemail system in place if you are providing by phone. You also must respond within a reasonable period of time, and reasonable period of time is defined as contact initiated within 24 business hours if service via direct linkage was unavailable at the time of initial contact from the customer. And then the program staff member who can provide information or services to the customer, this must be specifically identified required partner staff persons who are trained and knowledgeable regarding the required partner services and programs, and for whom providing services via direct linkage is a formal part of his or her job. It can't be someone who is sitting there that doesn't have the information that that customer is specifically looking for. I also wanted to note that the specific method of providing services through direct linkage technology has to be accessible to individuals with disabilities. Okay, so now let's switch over to budget aspects and infrastructure costs. So a major change in final rules, and worth bringing to your attention here, is infrastructure costs. These are non-personnel costs needed to operate a comprehensive one-step center. So when you think infrastructure costs, think leases, utilities, maintenance, equipment, assistive technology, and other technology to help participants access services. Switching over to shared costs, these must be negotiated every year in every local area, and there's a difference between infrastructure costs and shared local system costs, and that's demonstrated on the slide above. Infrastructure costs are specific to operating the comprehensive one-step center. Shared local system costs, which are also called local service delivery costs, are the other costs it takes to deliver services through the local area, So it can include affiliate sites, satellite campuses, or other locations or ways customers can access services if they are not at the Comprehensive One-Step Center. It encompasses every way people who need jobs or businesses who need skilled workers access the services available in the local area. And there's examples on the slide. I know I mentioned this earlier, and I think I repeated it twice, but there is more flexibility under the local funding mechanism when it comes to infrastructure costs. So this is the default. Local agreement is expected. When partners make contributions to the Comprehensive One-Step Center, the law places caps on the amount partners can contribute under the state funding mechanism when partners do not agree. So that limits the amount of money available to fund the One-Step Center. There's no caps applied in the local funding mechanism when partners agree on how to share costs. So theoretically, there could be more money available if the partners come to an agreement. Here's a brief explanation on the slide of the three types of contributions core and required partners can make under the local funding mechanism. So there's cash, which is cash or interagency transfer between required partners. There's non-cash, and I want to note that does not equal in kind. That was a change made under final rule. Non-cash is expenditures incurred by a partner on behalf of the One-Step Center and non-cash goods or services to be used in the center. And then under final rule, a new contribution came up called third-party in-kind. This can be space, equipment, technology, non-personal services, or other contributions from a non-one-step partner. And a really good example that we like to give is if a county donates building space to house the Comprehensive One-Step Center, that would be considered third-party in-kind. So the state funding mechanism is obviously a last resort because there's no flexibility. The state funding mechanism is obviously not desirable. It could result in less money to fund the Comprehensive One-Step Center, and partners have fewer options for how they meet their costs. They can only use cash to pay their fair share, which would be dictated by the governor. And partners are capped by law in how much they can contribute, further restricting the amount of money available to operate the Comprehensive One-Step Center. So for all the reasons that I just discussed, the state funding mechanism is the last resort. Back to shared local system costs or local service delivery costs, they're less defined than infrastructure costs to operate the Comprehensive One-Step Centers. The purpose of these costs is to promote integration and streamlining of service delivery through the local area. So local areas have more discretion about which costs they allocate out to partners and how the partners pay their share. So an example would be local board functions and costs to promote integration or joint staff training. The next slide gives further examples. I wanted to note that the list could really include anything that local partners agree to during negotiations. Okay, now to switch over from costs to the One-Step Operator. The final rules spell out in detail the role of the One-Step Operator, and it's primarily to coordinate service delivery of required one-step partners and service providers. The final rules provide examples, and the local boards are responsible for setting the exact roles they want in their local areas. And I have some examples up on the slide. One-step operators do as the name suggests. They operate comprehensive one-step centers, and they must be in place by July 1st, 2017. One-step operators must be competitively procured, and I know several local areas are either in this process or finished with this process. And this needs to be done every 4 years. Their roles must be clearly stated in the RFPs that local areas use to procure them. MOU and budget negotiation timelines. So the 105-day period for negotiations has ended. The outcome reports were due on April 15th. And the 30-day remediation period for areas that have to undergo this will start on May 1st. These are all laid out in the governor's guidelines if you want to go back and look at those for reference. And then I also have a slide with the timelines. And I guess there should be a big star on May 1 with "We are here," because that's where we are currently at. Okay, I know that was quite a bit of information on different topics that fall under MOUs and the governor's guidelines. Are there any questions? We can either accept those via the chat pod or by phone.
While you all are thinking about that, I want to add that hopefully it came through that it's a negotiation process at the local level. So if you were asked to participate in the give and take on deciding what costs would be shared and what the cost would be counted and how each partner would contribute to the operation of the one-stop center, that's great. If you were handed an invoice and said, here's what you owe, that's not negotiation. So if that happened to you, that's not how the process is supposed to work.
There was a question submitted, this is Bethany Yeager, about required partners versus mandated partners. The language used in WIOA just refers to required partners. It means you're mandated to offer your services in comprehensive one-stop centers under the law. So the word is just required partners, but it means mandated, yeah.
Yeah, Leslie?
I just have a quick question. So through CSBG, are we required for infrastructure costs and shared costs?
Yeah, every required partner is required to contribute to shared costs, which is the broad category. Infrastructure costs are what it takes to, run the center.
Right.
And then the shared costs are service delivery system costs. And so imagine there's a center in the middle of the service area, but then there's a bunch of affiliate sites and all these other places where customers can access their services. The system costs are covering that whole thing. The infrastructure costs are covering that one center in the middle. And the requirement under WIOA is that every required partner just contribute to the shared costs in general. But some areas are agreeing that they're not going to require their partners to pay the delivery system costs. They're only going to require the partners to pay the infrastructure costs.
So it's a local level decision?
It's a local level decision, but you have to contribute something, and whatever their local partners agree to, you have to contribute to the running of the center at least.
Okay. Next question is, what happens when there might be one or more agencies in the area, but not all the agencies were involved in negotiation or had a voice?
So when multiple agencies are in one area.
Mm-hmm.
So that goes back to the TEGL that was issued, provided clarification on that, and I can read that again. But when two or more grant recipients are in the area, they're both required to be at the table for negotiation.
Okay. So if they weren't at the table for negotiations and the MOU was signed they just signed it because that's the expectation, what happens then?
They should have been part of the negotiations from the beginning, and they should all sign it as part of, their affirmation that they agree with the outcome.
Can we get a copy of that TEGL too, please?
Absolutely. I can get you the TEGL. And also, one thing we did make available when we launched the MOU template is we made additional signature pages. So that's what we need. But yeah, we'll get you that TEGL 17-16.
And for this year, if that happened, there's still technically time, the negotiation period was 105 days,
right.
But we don't actually have to know until May 31st the outcome of every MOU. So there's still time between this remediation period where any CSBG partners who were not at the table could still come and just make sure that they are truly in agreement with the MOU.
So I'm just putting a scenario out there. So what happens if not everyone was at the table for negotiation?
Mm-hmm.
They were told that they had no choice, they had to sign it.
Yeah.
They signed it. Now the MOU is in place. What happens now?
I think it's not in place yet. It's not effective until July 1.
Okay, so they still have time to
You need to let us
raise the flag and say something.
They need to let us know.
Okay.
They need to raise it to the state technical assistance teams, which we haven't gotten to yet in the webinar, but there's,
their state,
or
CSBG.
you, or us, whoever. They just
Yes.
need to tell somebody,
Okay.
and we can work with you to find out what makes the most sense for responding to it.
Okay. Perfect. Thank you.
And Steve, I might need to get more information offline about specifics of your question, but we can definitely help you with that.
I think the short answer is that the one, there was a question submitted about the customers are linked to mental health, personal health, socioeconomic services. That in itself is not a financial contribution. All required partners are required to make referrals to others, so that's just kind of a given that you have to make referrals. So that's not a special contribution. I mean, we want you to do it, and you need to do it, and it needs to be spelled out in the MOU, but it doesn't equate a financial contribution or an in-kind service or anything.
And I'm glad you brought that up because referrals, as Bethany said, are actually a part of the MOU. And so in the MOU, you actually have to define the local one-step operators' roles and responsibilities for coordinating those referrals, the method for tracking those referrals, and then you have to list the other programs to which you'll make referrals.
So that's a local decision, how referrals are
Yep,
tracked.
yep, absolutely.
Okay, and then who's in charge of tracking those referrals, or as far as establishing the system?
Technically, it could be the one-stop operator, but again, that's part of the negotiation of how the partners agree they're going to operate. So,
So what if that discussion hasn't happened yet? Can it's still?
well, it needs to be part of the MOU.
Okay.
Yeah.
So if it hasn't happened, it needs to happen pretty soon.
Okay. Thank you.
I have a question. We are a very small CSBG, and we're in two areas. One is Area 5 and one is Area 11. But the Area 5 it's not taking into consideration, in my opinion, that they don't serve our whole area, and they don't even serve the whole county that they feel like they are servicing. They're only servicing the top half of that county. Is there any way that, we haven't been asked by one area to do that much, but the other area is bombarding us, and I don't feel that's fair to our clients, that I'm going to give a lot of money to a small territory and very little money to the rest of the territory. How can I address that?
Well, first of all, a local area should never be serving a portion of a county. So
They are.
Well, the local workforce areas are delineated by either a single or multiple county areas. So there's no county that is split between two different local workforce areas. So if for some reason we would just have to follow up with that, I would suggest that we could have an offline conversation with you and figure out the details of your situation.
Okay.
But I think that her question does lead into another question. So if a CSBG agency would be in two different workforce areas, do they have to contribute to both workforce areas?
According to the law, yes, or the Tegels.
Well, then are you going to, because the one area isn't looking at it that way, and they want us to contribute a lot, so if I only receive like $80,000 for the whole year for CSBG, how are you going to calculate that I give my money equally to both territories?
Well, see, that's the trick. You do not have to contribute equally to both territories. In both local workforce areas, that should be part of the negotiation conversation where you let both parties know you are in two local workforce areas, so you are contributing to the success of clients in both of those local areas. So your ability to contribute has to take into consideration that you're covering two different areas. So can't tell you, what the magic formula is for that, but I can tell you that that should be a factor in the negotiations when you jointly determine what your contribution would be.
So then that leads me to a follow-up question. So it's the requirement by the state that they have to pay 0.25 FTE. Is that correct?
Yes.
Minimum. So then if I have an agency who is a small agency and has to pay 0.25 in each area, but they can't afford to pay it in one, how does that work?
So go ahead.
There's been some guidance issued since the new TGOals and related to this 0.25 FTEs. And the interagency work group at the state level has discussed this. So the way that they're doing this is that if the local partners all agree that CSBG can contribute less than the 0.25, if they say, all right, we understand your situation, it's fine if it's whatever, less than 0.25. And the local areas all agree, or the local partners all agree to it, so you consider your MOU agreed upon. When you submit it, you explain the situation of here's why the local partners accepted less than 0.25 FTEs, and then there is an opportunity for the governor to accept that or not. So yes, the requirement in the governor's guidelines is 0.25 as a minimum FTE commitment. If everyone agrees to it, though, the governor will consider whether that is okay for that scenario.
Okay.
But it has to be justified, and all the partners have to agree to it. That's the tricky part. It can't just be CSBG saying there's no way we can do this, so this is what you get.
Okay.
That doesn't work.
So what about this? What if say not all the partners agree?
Yeah.
And some of our CSBG grants are relatively small,
Yeah.
so they just can't pay it.
Yeah.
Because unfortunately, when they pay that, then they're taking services
Away
away
from
from a client.
Yeah.
So what that would happen is I would expect that the CSBG provider would not agree to the negotiation and not sign. Therefore, that would head into remediation if they couldn't resolve it on their own. And then the state interagency work group would come in and help to negotiate a settlement.
And the governor's guidelines do allow for the interagency work group to set one partner's contribution if needed, if that's going to prevent impasse, because the whole goal is to avoid impasse and avoid the state funding mechanism for infrastructure funding. So the interagency work group can come in and say, partner, this is what you pay. We hope that doesn't happen, and I don't think anyone would do it. You know, I think it would have to be very justified to do that, but that is allowable under the governor's guidelines.
And our agencies want to pay their share, but the problem is they get such small grants that...
That's true for other programs
Yeah.
under WIOA too, that there are small programs, and it's not one size fits all, and we know that.
Ma'am?
Yes.
I'm Allison Rumler-Gomez from Community Action Partnership of Central Illinois, and I did put a question out there, and I do think it sort of speaks to this, that our CSBG service area actually covers 4 different WIOA areas. So we were simultaneously involved in 4 different MOU negotiations, and at no point was there ever a bottom dollar established for what our agency, given the fact that we overlap 4 different areas, provided. And I think that's where a lot of the confusion is with the smaller agencies that do have overlap in multiple WIOA areas, is that MOU negotiation process only went down to that state level of establishing what the CSBG benchmark was. But for me, I don't know whether 0.25 FTE is something that we can do in Region 1 when I don't know what the other 3 regions have obligated us to, or even what that looks like, or how many multiple partners. I know with McFarland in Peoria, he's got, I think, 5 different CSBG agencies that feed into his area, and we don't have a system at the CSBG level to create an allocation plan within the CSBG agencies. I feel like that's where a lot of the snafus are coming, is the MOU negotiations were relatively clear with the allocations down to that state level or the obligation of CSBG, but it's when you have a WIOA region that overlaps multiple CSBG areas, it is us as CSBG agencies trying to determine how do we figure out what our contribution is when, in our case, we're looking at 4 different areas with 4 different MOU negotiations happening simultaneously, with one having 2 different CSBG agencies, one having 5, one having 4, one having 6. We don't have a methodology to come up with the portion. So how do we effectively declare that we're on board and we can accept the negotiation when I seriously have no idea what that bottom dollar amount even looks like at this point for for any one of those regions, let alone 4.
So Allison, let me ask a follow-up question, Allison. So you talked about the 4 different WIOA districts that you currently reside in. Were you involved in just one negotiation process?
No, we were involved. I have a CSBG coordinator who's here in the room with me. We also have another CSBG transitioning, exiting director, and myself, and either by web, by personal presence, by email communication, we were actively involved in all 4 MOU negotiations.
But you don't know what the dollar amount is?
And we know what the dollar amount is for CSBG, but we don't know what the dollar amount is for Community Action Partnership of Central Illinois.
This is Lavon.
Okay, I'm
Can
okay. Go ahead.
Hello? Well, all I was going to... I'm getting a feedback. I'm sorry. It sounds really weird. But anyway, what we did, and I don't know if it's possible, and it might not work this year, but, you know, we have multiple partners for adult ed and post-secondary Perkins, and they don't follow the lines of the LWIAs either. So what we did, we looked at a map and mapped out where particular providers were the primary. If they had, you know, and then we defined them as the primary, and so that everybody's still in there, but there are some areas where there might be 3 adult ed providers that are, quote, primaries because they're all in an LWIA. There might be one where there's only one primary because we set criteria for our partners that they would only, each partner in a group of partners in an LWIA would only pay into one LWIA, you know, one comprehensive one-stop. So that way we worked it all out in advance and in a sense assigned them to their LWIAs, to their one-stops. And we've done that way back through WIA and into WIOA, and it has helped. It helped a lot. I don't know if that's useful for you or not, but.
Well, Lavon, this is Bethany, so let me just make sure that that was clear. The ICCB set a policy so that when there are multiple community colleges serving an LWIA, that the community colleges agree that only, I'm sorry, say it again, Lavon. I know that's
okay.
A good example, but I want to make sure
there were some areas where a community college lapped over, and they might have like 20% of LWIA 15, but 80% of LWIA 14. So just for, you know, not that really lines up. But anyway, so we put them in LWIA 14. They have some coverage in LWIA, but they're not primary. So no, you could still have multiple community colleges in one LWIA, but we don't have a case where we have a community college in 3 or 4, 80% in one, 5% in another, 10% in another, and 5% in another. If they were 50% or more, we assigned them to that LWIA. We did that years ago, and we've been working that way ever since.
So can a state agency set a policy that overrides the governor's?
No.
Isn't that what that's doing?
It doesn't. No, it doesn't override it. It's a policy
It
that
doesn't override. All partners participate in the one-stop. All providers, adult ed and CTE, provide their services, infrastructure, and shared systems costs in every LWIA. It's just that we don't have an adult ed provider providing an LWIA 14, LWIA 15, the same provider. Let's say Elgin Community College. They're not going to be in LWIA 5, LWIA 4, LWIA 3, LWIA 2. If they touched on all those, they're going to be in LWIA 5 because that's their primary. We're over for 50% because we've got total coverage. We've got plenty of coverage from our providers in all the other LWIAs. So I don't know if I made things worse or better.
Thanks, Lavon. I just want to go back to Allison's comment. For the agency, my understanding is for the Community Action Agency, they're only responsible to pay money out of CSBG, nothing else. Is that correct? So Allison, you wouldn't have a payment for Central Illinois. It would just be out of the CSBG grant that you have to pay something.
The CSBG is the required program partner.
Right.
So that would only be CSBG is the only one required to pay anything.
I do understand that, but so we have CSBG services in 6 counties. And I'll throw out numbers because I think maybe something concrete will make more sense. So we have $320-ish thousand to cover 6 counties. In those 6 counties, we have WIOA districts in Peoria, Champaign, Decatur, and Springfield. So I do understand what the financial commitment for CSBG is in Peoria and in Champaign and in Decatur and in Springfield. I understand what the CSBG relationship is. But I saw McFarland's on the line, so he can maybe chime in on here. He's got 5 CSBG agencies that overlap in that district. So I may know that 0.25 equals $5,000, for example, but McFarland doesn't know whether that means, and he's probably the primary there and sweating the most, that he would collect $1,000 from each one of those CSBG agencies, or he would be collecting $2,500 from self and $500 from the other. He doesn't have a formula by which he would establish that. And we're doing that 4 times over. In each one of those MOU negotiations for those, we're trying to, how much do we pay as an of CSBG?
Okay, we're going to have a quick sidebar here. Give us just a second.
Are you guys still there?
We are. We're just conferring before, just so we give a consistent answer.
Okay, that's okay.
1 second, please. Okay.
Well, Allison, were you involved? You were involved in the negotiations just for Capstone in those different areas, correct? And you weren't negotiating on behalf of any other CSBG entity.
No, we were, I believe all of us as Capsule, as Community Action, or CSBG agencies were present. Most were present at each one of the MOU negotiations.
That's good. That's the way that we were hoping that it would be, that each individual CSBG provider is at the table and does negotiate. And my question is, and tell me if this helps or not, it's not that you come in and say, here's our dollar amount that we're going to pay. It's what is the commitment that we're going to make, and what is the number of FTEs that it's going to take to provide the services during all regular normal business hours of every week, because that's the consideration for how you determine your FTE calculation. Once you know that, then your dollar amount automatically flows through so that it's a proportionate amount compared to the benefit received, basically. How many customers you're serving through the Comprehensive One-Stop Center, and the demand for your services is the first step. The second step then is the amount that's allocated financially to that.
Right. I totally, and I'm not saying that this is your problem. I actually feel like this is a DCEO issue that they need to take up, which I've mentioned to Leslie DeVore and Adrian Angel. say that we went to great lengths to make sure that CSBG understood its FTE for each one of these WIOA districts. I feel like that process was meticulously outlined, and we were all very clear on it. What we're unclear on at this point is how do we, as sharing CSBG agencies, decide how we break out that 0.25, not just that the 0.25 FTE is not a manageable number or not a reasonable number. I feel like in all four of our areas, the CSBG contribution is reasonable. I don't think it is overwhelming by any way, shape, or form. But there is no consistent methodology. I love the comment about the community colleges. If DCEO were to come out to say, do this, take a map and decide geographically by land space what percentage of the area is covered by your CSBG agency, and of the $5,000 commitment established at the 0.25 FTE, you take 25% because that's how much land space your CSBG agency covers of the WIOA district. I'm saying there's no methodology in place right now at the DCEO level for CSBG in order to determine consistently across the state how CSBG agencies make a determination on when they share with other CSBG agencies, how do they break out their 0.25%. I was really hoping that you guys had some magic justice on that, or you had already talked to the folks at DCEO, but I feel like that's still a question that we need to press DCEO about, is what is the consistent methodology that should be applied, or are you okay with us abandoning the idea of having a consistent methodology and us just going back to the negotiation table with our own CSBG peers and figuring out how that's supposed to work?
Well, I won't speak for Leslie. This is Mike from Employment and Training and Commerce.
Okay.
This is something that ultimately is part of the local negotiations. So this could be decided between the local partners. Okay. If you feel like you cannot do that, I guess my point is there doesn't necessarily have to be, and emphasis on the necessarily, there doesn't necessarily have to be a standard way it's done across the state because it's a local negotiation. Okay. However, if the powers that be at CSBG here at DCO want to put on a standardized approach, certainly that's their prerogative to do that. But I guess I would suggest in the field, be careful what you ask for, because
right.
The more you can do locally, the more you can decide locally, the more control you have, and the more the solution that is mutually negotiated is nuanced for the realities of your region. If a standardized approach is put on at the statewide level, then it's something that has to work pretty well for most of the state. So what works pretty well for most of the state may not be the best solution for your particular small section of the state. So it behooves you to come up with this on your own. But if you can't, then there are other ways to approach it.
So I guess I was clear that that when you speak of the negotiation process or that appeal process, to come up with that solution goes below the CSBG line as well? Like to say, we're fine with the 0.25 FTE for CSBG, but we can't figure it out at the CSBG level. Because, again, I know especially in 3 out of the 4 areas that we're in, we haven't had any sort of conflict. The folks that would consider themselves as the primaries have just opted to take on a vast majority of that costing. But in Peoria, I know there are 2 that have just said, yeah, we're just not going to help out, Mr. Bragg. Sorry, you're going to have to figure out a way to make that work. So if it's just down to that one location for us where we would need to, I guess, go to the governor's office, I'm asking if below that CSBG line, is that appeal process also available? When we don't take issue with the established CSBG amount, but we do take issue with how that CSBG amount is distributed among the CSBG agencies.
Can I jump in again? Because at the state, we didn't determine a methodology. All we did was make sure that partners were only providing in one LWIA, but coverage is provided, and we don't overreach on any of the rules. But what we did do, we did not mandate a methodology beyond that. What we did then was we did ask partners to come together, those that were identified, and then they decided how much, just like Mike said. So they've got a 0.25. Then those partners figure it out. So let's say there's 5 adult ed providers, let's just say in LWIA 5. And so those 5 adult ed providers, then work together as one partner to provide that 0.25 FTE and figure out what each of them is going to contribute. All we did was set the stage so that they were able to work more effectively.
Allison, this is Leslie. I very much understand your issue now, and I get what you're saying, and you have a point well made. Let's have a conversation offline, and we might include McFarland in that as well if he's having issues. I will call you after this conference call.
Thank you, everyone, for your questions. Being mindful of time, we have hit 11 o'clock. I am going to skip over the certification of comprehensive one-step centers, but it is something that you have as a resource. And I want to go to part 4, which is just resources. I do want to let you know, and you may have had contact with state technical assistance teams or stats, but they are out there as a resource. They were available to local areas. They reach out to local areas and do check-ins through the negotiation period. It was really a liaison between the local areas and the interagency work group, and we were able to mitigate some issues before we got to the remediation period. The next slide is the contacts at the state level. So for Commerce, John Barr and Mike Baker are the stat contacts. And then I know I mentioned throughout the call several times the WIOA implementation portal, but that's really the go-to resource for anything WIOA. It's public access. You can go on there, and it's broken down into documents and updates, and that's where you can find items like the governor's guidelines or the stat leaders in your EDR. There's regional planning materials. There's archived webinars like we're having today that are really helpful to go back and listen to. And then I really want to point out the WIOA frequently asked questions. Some of the questions that came up today are already documented in this section. So if you have a question, I suggest going there first and looking to see if it's already been answered for the entire state. If you have a question that is not listed, raise your question, and we will make sure that an answer is given and addressed at the interagency work group level, and then if it's applicable, we will put it on the portal. So I thank everyone for your time today and for the individuals that we need to follow up with. We'll do that after the call.
I think that if you have any additional questions that you didn't raise during this webinar, please feel free to email Leslie DeVore. We'll put the questions together and submit them to the WIOA group. McFarland, I see your question about the additional funding that has not yet been determined, but we will definitely look at it. Allison, I will give you a call after this webinar. And I just want to thank the individuals that put together the webinar. It was very gracious of you to help us with this process, and we do appreciate it. So thank you so much.
So we'd like to make the polling questions that people said they didn't have a chance to answer beforehand available. And then we also have some additional polling questions after you post-webinar for you to answer as well. So Chelsea, if you could put the polling questions up for everyone.
And we will send out, I will send out the slides right after the webinar.
Okay. Thank you.
Thank you so much, everybody, for joining us. We appreciate it.
Thank you. We'll leave the poll up there for just another minute so everyone has a chance to respond.